How's it going, everyone? It's Sam doing a little bit of a different video today, not talking about a stock market app, but talking about how to use an investment calculator. So there are a lot of different calculators out there. This one is Investment Calculator by Bankrate. You can just Google this or search it and you can find this earnings calculator or this investment calculator. I just wanted to walk you through it because some people don't really understand how to use these. And I want to talk about each part of this and kind of give you an idea for what this does. So let's say that you have an investment goal. Let's say you want to hit $1 million. A lot of people don't really know what their goal is. A lot of people don't know how much they need to retire. But let's just say you have $1 million that you want to hit. And as we go down here, you can kind of see how this is laid out. So the really important things are how much you're investing. So how much are you investing? The time frame. So are you investing this every week, every 2 weeks, every month, every year? And how long you're investing it? And then what is your rate of return? So these are going to be things that we talk about. But let's say you're 25 years old and you want to retire at 60. So 60 minus 25 equals 35 years. Your initial investment, let's say you start at $0. You could say, okay, I already have $10,000 saved. I want to start with that. That is just the initial amount that you have invested. Let's talk about the rate of return. So a lot of the time, if you're invested just in a general stock market index fund, so something like general index fund will return about 8 to 10% a year. So let's say a conservative 8%. Now you might say, okay, I wanna account for inflation, so you can account for that. Inflation's usually 2% a year, give or take. So you could just subtract 2% from this, or if you said, okay, it's normally a 10% rate of return and 8% is 10 minus 2. There are different ways to go about it, but I usually just say 7 or 8% here. This is the amount that your money will compound each year. So if you have $10,000 to start, then the next year, if you don't put anything in it, it should be $10,800. The next line is the periodic contribution. So how often and how much do you put in? So let's say you put in $100, let's say $100 a month. So $100 a month compounded annually. I just leave this how it is. That means that you would have about $214,000. So obviously you need to invest either more, you have to get a better rate of return, or you have to have more years. So if we increase this contribution a little bit, let's say we invest $500 a month. So you could invest in a Roth IRA, $500 a month, max that out so you can get tax-free investment returns essentially after that time is up. If you get an 8% rate of return for 35 years, you would get about $1 million. Now, if you can increase your rate of return, let's say you do a little bit of individual stocks and you just get 9% rate of return, you get about 1.3 million. Let's say you wait a couple more years. Let's say you wait 2 extra years and you invest at 62, or you retire at 62 instead of 60. You would have about 1.6 million. So there are different ways of going about this. If you could invest more, that would be great. But a lot of people don't know how much they need. Let's say you think you need about $1 million. Well, that means based on the 4% rule, or the rule that a lot of people determine is a good rule of thumb, if you can take out about 4% of your portfolio over 30 years, that means that you shouldn't run out of money. So with a portfolio size or an investment portfolio size of about $1 million, you'd be able to take out about $40,000 a year, and most likely you would not run out of money based on taking out $40,000 a year. So that is just a rule of thumb. It's not a hard and fast rule. It's not always the case, but a lot of people use that as a good baseline. So definitely consider how much you spend. If you spend $80,000, or if you're a little bit older, if you're 75 when you retire, you probably won't need the money as long in retirement unless you're planning on living to over 100. So you might be able to take a little bit more of your portfolio each year. So thank you guys so much for watching this. Hopefully this helped. Let me know if you have any questions in the comments below, and I will see you in the next video. Bye.